Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Defensive Stocks, Smart Investing for a Stable Future. Healthcare. The healthcare sector is another cornerstone for defensive investing. People require medical care, making these companies somewhat immune to economic downturns. Here are notable companies in the healthcare sector: Johnson & Johnson, J&J. This healthcare giant covers a broad range of products, from pharmaceuticals to consumer health. Their diversified portfolio helps stabilize revenue streams. Pfizer Inc., PFE, known for its pharmaceuticals, Pfizer has a strong pipeline of medications. Their role in the vaccine space has further solidified their importance in healthcare discussions. United Health Group Incorporated, UNH, as a leading health insurance provider, United Health offers a variety of health services. Their vast network and customer base contribute to its resilient earnings. Investing in healthcare stocks not only provides stability but also a chance to participate in a growing industry focused on human health and well-being. By targeting these sectors, you can build a portfolio that withstands economic turbulence while still yielding potential returns. Each of these companies represents a unique opportunity to invest in essential goods and services that consumers will always need. Want to protect your investments from market swings? Consider adding these defensive stocks to your portfolio. Risks associated with defensive stocks. While defensive stocks can offer stability, it's essential to consider their potential downsides. These stocks are not immune to market fluctuations or economic shifts. Understanding their risks can help you make more informed investment decisions. Limited growth potential. Defensive stocks may not provide the same growth opportunities as their more aggressive counterparts. They are often tied to essential goods and services, which means their growth is limited by the nature of their business. In bull markets, when investors are looking for higher returns, defensive stocks can underperform. Here's why growth can be stunted. Congestion in growth. Defensive sectors like utilities and consumer staples grow steadily but slowly. They aren't designed for explosive growth. This could mean missed opportunities in fast-growing sectors like technology. Market sentiment. During economic booms, investors typically favor growth stocks or cyclical stocks that show potential for rapid returns. Defensive stocks often languish in these times, as their appeal dims relative to higher risk options. Valuation pressure. When investors flock to growth stocks, the valuations of defensive stocks may decrease. This can happen even when the companies themselves remain stable. It may lead to a frustrating experience if you're seeking capital appreciation. In summary, while defensive stocks can provide safety during downturns, they may not ignite your portfolio during market highs. Interest rate sensitivity. Another risk involves the sensitivity of defensive stocks to changes in interest rates. Those shifts can have a significant impact on their performance. Consider the following factors. Cost of capital. Many defensive companies rely on borrowing to fund operations and expansions. When interest rates rise, borrowing costs increase. This can squeeze profit margins and limit growth potential. Dividend appeal. Defensive stocks often attract investors looking for steady dividends. However, when interest rates rise, fixed income investments become more attractive. As a result, investors might pull money out of defensive stocks to chase higher yields in bonds. Economic cycles. Interest rates are often used as a tool to control inflation. If rates rise too quickly, it could lead to economic slowdowns. Even defensive stocks, which are viewed as stable, can feel the heat during such times. Being aware of these interest rate dynamics is crucial when considering defensive stocks as part of your portfolio. Each of these risks paints a picture of a more complex investing landscape. By staying informed, you can better navigate the potential pitfalls while seeking stability through defensive options. How to incorporate defensive stocks in your portfolio. Incorporating defensive stocks into your investment strategy can help mitigate risks, especially when markets are uncertain. While these stocks offer stability, they should be balanced with other types of investments to optimize your portfolio. Let's explore how you can effectively blend defensive stocks with other asset classes and identify favorable market conditions for investing. Asset allocation strategies. When adding defensive stocks to your portfolio, a sound asset allocation strategy is key. Here's how to balance these stocks with growth and other investment types. Diversification. Don't put all your eggs in one basket. Mix defensive stocks with growth stocks, bonds, and other asset classes. This reduces risk while enhancing potential returns. Set a target allocation. Consider dedicating 20-30% of your portfolio to defensive stocks. This can provide a buffer during downturns while allowing room for growth investments. Rebalance regularly. Monitor your portfolio and rebalance it at least once a year. If defensive stocks outperform, they might take up a larger portion of your portfolio. Adjust it back to your target allocation to maintain balance. Consider the market cycle. Different market conditions favor different asset types. In bull markets, you might lean more on growth stocks. When markets are shaky, increase your allocation to defensive stocks to shield your investments. Balancing defensive stocks with other investments helps create a resilient portfolio that can weather various market conditions. Identifying the right time to invest. Knowing when to invest in defensive stocks is crucial for maximizing benefits. Here are some tips on market conditions that are favorable for buying these stocks. Economic downturns. If you see signs of an economic slowdown, it's a great time to consider defensive stocks. These stocks often perform well when others falter, capitalizing on the increased demand for essential goods and services. Market volatility. During periods of high volatility, defensive stocks typically show less price fluctuation. Look for dips in the market when investor sentiment turns sour as a prime entry point. Rising interest rates. When interest rates rise, many investors flee to safer investments. Defensive stocks can provide a stable place to park money when cash flows are tight. Geopolitical uncertainty. Times of political or economic unrest can create fear in markets. Defensive stocks tend to perform better in these situations as people prioritize essential goods over discretionary spending. Being observant of these market indicators can help you time your investments more effectively, allowing you to capitalize on the strengths of defensive stocks. By implementing these strategies, you can skillfully incorporate defensive stocks into your portfolio, helping safeguard your investments against turbulence while still looking for growth opportunities. Conclusion. In this section, we'll summarize the essential aspects of defensive stocks and their significance in today's investing environment. Defensive stocks play a vital role for investors seeking stability amidst economic uncertainties. They belong to sectors that consistently meet consumer needs, ensuring steady earnings even when markets are volatile. Key points about defensive stocks. Stability. These stocks typically show less volatility, making them a reliable option during downturns. Income generation. Many defensive stocks offer dividends, providing investors with a consistent cash flow. Sector variety. Defensive stocks can be found in essential sectors like consumer staples, healthcare, and utilities, each providing unique stability. Relevance in modern investing. In today's unpredictable market, volatile swings can create financial stress. Defensive stocks serve as a safety net, allowing investors to safeguard their portfolios. They can help balance risk while enabling potential capital growth over time. Market conditions. Defensive stocks shine during economic downturns and periods of high volatility. They provide a haven that lessens investor anxiety. Long-term strategy. By incorporating defensive stocks into your investment approach, you position yourself for sustainable growth while minimizing risk. Considering these points, integrating defensive stocks into your portfolio can be a pragmatic choice. The stability they offer can help you navigate uncertain times, fostering confidence in your investment strategy. Are you ready to explore how these stocks can fit into your financial plan? Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.